U.S. markets are taking a pause after a week of record-setting highs. Well, NASDAQ is down for the first time in 3 days. The Dow shed 0.2%. Tech stocks are under pressure. And as we discussed earlier, Twitter fell more than 10%, while Facebook shares also dipped more than 1.5%. Investors are keeping a close eye on U.S. stimulus with an incoming Biden administration. So for more on markets and political economic uncertainty and obviously the worsening pandemic numbers, let's bring in Boombust co-host Christy Ai and founder and partner at Synergy Advisory Management Group, LLC, Andrew Aarons. Andrew, let's start with you. Equities, they're falling this Monday as investors, they assessed valuations and the outlook for more COVID stimulus. What's behind the sell-off today? And is this just a temporary pullback, or is this the start of a major correction?
Yeah, I think this was a temporary pullback. We had news this morning of what was going on with the ban of Parler from a lot of the major tech giants. So that was the reason for the sell-off. We have relative strength. We have a lot of strength in the market right now. I don't think that any major sell-off is imminent. We also had some Chinese stocks delisted from the New York Stock Exchange this morning, and we also maybe having a little bit of a hiccup with some chips in the auto industry. So, but besides that, the market was pretty resilient today. There were some tech stocks that were down, but I don't see a major sell-off imminent.
Well, especially in the coming week. It seems like at least at the end of last week even, all global markets were up for that, despite all of the political turmoil here in the United States. Christy, I want to talk about the U.S. trade deficit. It jumped to $68.1 billion in November. This is the highest monthly deficit that we've seen in 14 years. How did this happen? Is it just purely the pandemic?
Well, no, it really came as a surge of imports overwhelmed a smaller increase in exports. So throughout the entire holiday season that we've had, retailers were stocking up their shelves and warehouses ahead of Christmas, which contributed to a sharp jump, pushing imports of consumer goods to a record high. So imports of capital goods used by manufacturers were the highest in 2 years. So then that means the combined deficit for goods and services was about $68.1 billion, while the deficit for goods alone was a record $86.4 billion. So President Trump had previously insisted that his tough on China and trade policies with the rest of the world would shrink deficits and bring back American jobs. And that was essentially his entire campaign platform, to reduce trade deficit and to justify his aggressive use of tariffs. But now instead, that trade gap has continued to expand with China and with other countries. So even with Trump's tariffs, imports from China totaled about $44.9 billion in November, which is the highest since December of 2018. And U.S. exports to China continue to lag behind the goal set under Trump's Phase 1 deal signed in January. And then the coronavirus, as you mentioned, could be blamed for some of this, as the virus has cratered demand from foreigners, from everything from aircrafts to American vacation and services. But even as we get over it, the weak dollar will most likely remain, as the only thing to reverse that trend would be rate hikes from the Fed, which really isn't foreseeable in the near future. So net, at the end of the day, the Trump administration has spent the past 4 years waging trade wars in a futile or counterproductive attempt to turn the trade imbalance around. And that will always be a major policy failure for the Trump administration.
That, and it wanted to bring back jobs, and much like you said, it didn't do any of that, obviously. Andrew, I want to talk about the coronavirus cases. They are continuing to rise. Now, despite the rollout of the vaccine, the administration of the vaccine, what we just spoke about earlier on the show, given that this entire rally has been driven on this optimism and hope that the vaccine is obviously, all of a sudden going to reopen the economy, what's going to happen when that proves to be nothing more than the wishful thinking? The market can't live forever on just stimulus and helicopter money, which it seems like that's all it's been doing.
Yeah, I don't know if it's just going to be wishful thinking. The market is doing very well. Companies their earnings are very, very good, and the market kind of lives on earnings. So I don't really see the market really pulling back here. We have low rates that are going to be in effect for a while here. And as long as we have good earnings and we're on the verge of earnings season coming up right now, I think we're going to do pretty well. So I don't think that, this is just, the coronavirus is going to be a major concern for what's going to happen with the stock market. I think the stimulus is going to take effect, and I think that we should see companies do pretty well, at least for the next few quarters.
It looks like it might be an economic growth and recovery that will take a long time, but we will see some throughout this year. Before we go, Christy, I want to ask about Bitcoin and other altcoins. They tanked this Monday. They wiped off about $200 billion from the entire cryptocurrency market. What happened here?
Well, we did say last week that a correction was imminent. So a 20% correction for Bitcoin, that is nothing out of the ordinary compared to historicals where we've seen 30-40% drops. So the sell-off came after a huge several-month-long rally and signaled some profit taking from investors. And we also have to note that over $2.7 billion worth of future contracts were liquidated in the last 24 hours, which caused the price of Bitcoin to plummet in such a short time frame late Sunday evening. So these liquidations in the futures markets were likely caused by traders borrowing additional capital to trade with larger positions. So the problem with these levered positions is that when the price of Bitcoin sees a minor drop, it can cause the position to be liquidated or become worthless. So you have a cascade of trigger events where all these traders were blown out of their positions over a very small minor move. So Bitcoin essentially saw a massive long squeeze triggered by large sell orders on Coinbase. And as these whales sold, it caused many of these long contracts to be liquidated in a matter of hours, which created this domino effect resulting in a steep sell-off of a 16% correction. But that sell-off found support at about the 32,700 mark, where a lot of the institutional investors then found their entry points again. So I think the overall sentiment around Bitcoin is still pretty optimistic, especially as the number of whales actually increased after Bitcoin saw that big price drop. So that shows that the number of whales are actually accumulating as the cascades of liquidation occurred.
I'm sure we'll probably see these highs again. Andrew Aarons of Synergy Advisory Management, Boomba's co-host Christy, I thank you both so much for breaking this down for us. There's no question